Hey guys, this is a market update. August non-farm payrolls just came out, sending Bitcoin a little bit higher. We're going to talk about why that is. Short and medium term, where do I see the Bitcoin price going? So the July non-farm payrolls came out and they came in at 315, which is around about in line with expectations at 318, so a little bit below. Now, this is still quite a lot of jobs to add, but it is slowing. And so the market is taking this quite well, considering that the Fed is trying to get their economy to slow down, and that's what these numbers are showing. So 315 jobs added. What we can also see is that usually in a growing market with normal inflation and growth, you might want to add 100,000 jobs. So we're still adding a lot, but obviously this is a pandemic recovery economy still. 315 is in line with expectations, cooler than you would want to see. So essentially, the market fairly likes this. You can see labor participation is going up as well. This is good. It's good news, right? Jobs added and participation going up. This is good news for inflation because the more people that participate, that drives wages down, more competition, of course, which is actually a good thing overall because with more competition in the market, inflation can come down. The Fed doesn't have to wallop us and keep pushing us lower. Bitcoin hasn't reacted too strongly to this, but it is up 2%. And I would consider fairly a decent level here, maybe some more risk on in the market in terms of sentiment, which could drive this up to the next resistance level at 21,000, 21,500, especially with this, which is the CPI report coming out in 10 days time. If that comes in underneath expectations as well, then we could definitely see some tests of the latest resistance, which is right 25,000. So they're the levels that I'm watching on the chart for Bitcoin anyway. Unemployment, pretty good as well. So what the Fed wants to do is bring inflation down without causing a massive recession. That's ideal scenario. It's unlikely to happen, but the market is taking this figure okay at the moment. Let's look at Ethereum as well, though, a much more interesting chart and a much more bullish chart. If you do want to go ahead and trade and you don't have Bybit yet, link in description to a deposit bonus up to $4,000. If you trade futures, you can get that deposit bonus via that link. So check out that in the description. As we can see here, I really like this chart for Ethereum. I think it is very bullish considering today's move. So, let's say that the market is a little bit more exuberant now because of this fairly decent figure, in line with expected. You're seeing a breakout right here of this chart pattern. Now, this is, yes, to the downside, but actually this is a fairly in some occasions a bullish pattern, which is this kind of falling wedge or this bull flag. We had a resistance level, a huge reverse head and shoulders was playing out here, and it did meet resistance. This is fairly normal, and we actually got this big sell-off here into this bull flag or this kind of falling wedge, which actually is a bullish signal. Now you have to read into what happens in the market as well. Given this figure, and also given potentially a good CPI figure in a few weeks' time, plus the merge, this all could be setting up for a very good trade. If we were trading above this head and shoulders, if we'd have broken this to the bullish side and we were trading around 2,500, I would be thinking, wow, we've already priced in a lot of that. But considering we sold off from this with bearish sentiment down to around 1,300, I would consider, given bullish sentiment in the market, bullish in kind of air quotes because for the time being anyway, plus a lot of potentially good news here, this could be a trading setup where you actually try and trade this bull flag or this descending wedge for an upside break, and you would just look to the latest resistance at 2,000 as take profit level for short term. Or if you want to ride the merge trade and you think that's going to be really bullish, you'd ride it up to maybe a level's kind of 2,300, something like that. So that's where I see Ethereum as well. This is short term. I still am of the opinion that there's bad news to come and a heavy weight on top of markets called the Federal Reserve. They just don't want to see the markets go up, and so they're always going to be coming out with rhetoric saying, nope, the job isn't done. Nope, we're not letting up on interest rate hikes, and so on. Some data to kind of show this as well. You can see that Bitcoin and the S&P are hovering, the correlation between them are hovering at an all-time high. This means they're moving in lockstep. What does that mean? It means the Fed is in control of this market, right? They are just saying you will go down, and they are going down, right? The S&P and Bitcoin and everything else, because the Fed is on top saying we're not going to lower rates. We are going to drive the economy into a recession. Now, the fear of that also is, these figures that come out and drive the market upwards short term because they're coming in and traders are saying, oh, that's better than expected. The fact is still remains that, over the next 6 months, we could see a heavy recession, and that's not good for risk assets. You can see commodities are falling off a cliff. They're meeting long-term resistance as well. And you're seeing this out of Korea, which is the trade deficit here, which is sometimes a leading indicator to American PMIs. You can see it's fallen off a cliff. I mean, we're looking like global financial crisis type of stuff. It's not good news overall for risk assets, because yes, you get these short-term little upticks when you get some good news, but the bigger picture is still a massive recession is on the cards. Now, that's not good for anyone, especially risk assets, until the Fed flips. But they've said they are not going to do that anytime soon. And so bigger picture, still definitely, have that in mind. Short term, if you're trading short term, these little, breaks and bits of good news are something you can trade short term for a short term setup, especially with CPI coming out here. If you think that's going to come in a little bit lower than expected, which it may do considering all of the fall off in oil, especially, then, like I said, these levels are very potentially something that the price may go to in the short term. To kind of prove this point that the market isn't in a great spot right now, I want to look at Bitcoin dominance. Back in the day, Bitcoin was 100% of the market before any other protocols came in. Then we get Ethereum and DeFi summer and that bull market in 2017. Then during the crypto winter, the consensus is that during a crypto winter, Bitcoin dominance rises. And you can see that happened here. The problem now is in this crypto winter, it's not. So what's the issue for Bitcoin? Two reasons, I think. Number one is you just have so many other options now. Stable coins are such a big part of the industry now. And if you're genuinely risk averse and you think the market's going lower, you're not going to go into Bitcoin because that's going down too. So you're going to go into stable coins. Hence, they take up more of the market and not Bitcoin. And so I think Bitcoin dominance, if you're including stable coins, is going to continue lower and lower because stable coins are going to make up much more of the market. The second thing is we have a much more specific narrative for Ethereum and profitable protocols right now. What I mean by that is if Bitcoin, because it doesn't have earnings, if you hold it, that is essentially a barometer of the market. I like to think of it as essentially just a large diversified financial index. And this is telling us that, the index, the market is not in a good shape right now. Specifically with Ethereum, as you can see, it's trying to make new lows, and it's specifically quite a bullish chart in comparison to Bitcoin. It's trying to make higher lows, right? Now that's a specific narrative, and that's what's driving Bitcoin dominance lower. The thing is that in this current market, these narratives are very important because look at these protocols, they actually make money, right? Ethereum makes $20 million a week, right? And it uses some of those profits to buy back tokens. And so, well, at least it will after the merge. And so you have this narrative that pushes that higher, whereas Bitcoin is far more just open to what the market is doing. And the Fed is doing everything specifically to drive the Bitcoin price lower. It's raising interest rates and it's taking money out of the system. That's why I think it's really important to understand what exposure that you have is when buying Bitcoin and Ethereum and some other protocols. Now, we can get into arguments about whether these protocols are over or undervalued in comparison to what they earn and potential growth rates. That's for another video. But interesting to see that I just don't think that Bitcoin dominance is going to get anywhere near previous levels unless or until the big boys get in. BlackRock, potentially sovereign wealth funds, and potentially energy producers. They haven't come on yet, and that's another specific narrative to Bitcoin that may change that. And of course, if rates come down and there's some sort of panic and they have to start printing money again, that's specifically for Bitcoin. So that is why Ethereum and Bitcoin are not the same thing. They give you different exposure, and so it's good to know the difference between them when you're putting a portfolio together. Check out the deposit bonuses for Bybit and the other platforms down in the description. I'm James with Money's EG. Cheers for watching, and I'll see you in the next one.